If you're getting ready to buy a house in Maryland, stop just for a second. There are hidden costs and traps that most buyers don't even know about until it's too late. And by then, you're locked in. The good news, most of these surprises can be avoided. And there are insider ways to save money that even the most seasoned buyers don't know about. In this video, I'm gonna walk you through the biggest hidden costs, the traps to avoid, and a few smart money saving strategies so you can buy with confidence and keep more cash in your pocket. But before we get into that, if you are new to my channel, I'm Caryn Gardiner, born and raised here in Montgomery County, Maryland, and Washington, D.C., with over 20 years experience helping hundreds of families, young professionals, retirees, buyers of all types find their perfect home and their community. So if there's anything that we can do to help you, please don't hesitate to reach out. Let's start with transfer recordation taxes, Maryland's version of real estate closing taxes. Here in Montgomery County, the long-standing tradition is that the buyer and seller split all transfer recordation taxes 50-50. But there's a huge exception that a lot of buyers miss: new construction. Builders almost never split these taxes. They expect the buyer to pay for them in full. On $1 million home, that can mean more than $10,000 out of pocket that you weren't expecting. So before you write a new construction, factor those taxes into your budget and know that asking the builder to split them is usually a non-starter. One thing to also note, if you are a first-time Maryland home buyer, you do get a break from the state of Maryland in that you don't have to pay your half of the state transfer taxes. This does not affect the seller at all. It's just something the state of Maryland gives you as like a thank you for being a first-time Maryland home buyer. And by the way, it's the only thing it's going to give you, so you're welcome. Next, HOA and condo documentation review periods. Here in Maryland, buyers are automatically protected with review periods. If the home's in an HOA, you have 5 days to review the resale package once it's delivered. For condos, it's 7 days. These timelines are set by Maryland law and they can't be voided. So during that period, whether it's the 5 days or the 7 days, you can back out of the contract with no penalty if you don't like what you see. Fees, pending assessments, or strict rules you just can't live with. The catch? The clock starts when you receive the documents. And if you're in a competitive market, sellers sometimes drag their feet getting them to you. The sooner you request them, the sooner that review clock can start. This actually happened to me not that long ago. We were under contract on a super cute townhome in Potomac. There was an HOA. And my buyers had a lot of work to do with the loan because it's a little complicated. So they were doing everything was going great. We were almost at settlement date and we still hadn't received the docs. And they started to get really nervous. Is there something wrong with the house? Why don't we have these docs? You know we can cancel if we get them, but are we gonna cancel at this point? Like, we're done. Turns out everything was fine. The seller was just dragging their feet without any malintention. But just keep that in mind. You need those docs as soon as possible so you can make an informed decision if you want to move forward before you're really stuck in it and really committed. All right, let's talk inspections, because Maryland's general home inspection is just the beginning. Many homes here, especially in Montgomery, Howard, and Frederick counties, have radon levels worth testing. Just so you know, radon is a natural gas that comes from the ground that can be toxic. So you want to make sure your levels are below 4.0 per the EPA. This test takes at least 48 hours to perform, so you got to keep that in mind when you're writing the contract if you want to put this contingency in it. And if the test comes back with high radon levels, it's not a huge deal to remediate. It may cost you anywhere from $1,200 to $2,000 to remediate radon levels depending on the size of the house. If the property is on well and septic, you need separate inspections. A failing septic system can run anywhere from $20,000 or more. Chimneys too are frequently neglected. Knowing which inspections to add up front can keep you from absorbing expensive repairs later. But you need to do all of them within your contingency period. Now, here is a money-saving strategy most people don't know about, and it ties to something really important: title insurance. When you take out a mortgage, your lender will require lender's title insurance, but that only protects the bank's interest in the property. not yours. You can choose to buy owner's title insurance, and it's a one-time fee at closing that protects you. I can't stress enough how important this is, and here's why. Sometimes an old unpaid lien pops up. Maybe a contractor who wasn't paid 10 years ago. There could be a missing heir who suddenly claims ownership. There could be clerical errors in past deeds. Yes, a single typo can cloud your title. Fraud or forged signatures from a prior sale can surface years later. Without an owner's title policy, you'll be fighting those battles on your own. And those legal bills will be super expensive. With an owner's policy, the title company steps in and covers the cost to fix or defend the issue. It's protection that can save you from catastrophic expenses. A few years ago, here in Montgomery County, a couple bought what they thought was their forever home. After closing, they discovered an old undischarged lien from a contractor decades earlier. A lien the sellers didn't even know existed and the title company missed. Clearing it wasn't cheap. It took an attorney, court filings, and thousands of dollars before they could refinance and eventually sell. That's the kind of nightmare an owner's title policy is designed to handle. The title company steps in and covers the legal fight, so you're not left paying to clean up a past owner's mess. Now for the money-saving part. While you're under contract, ask the seller for a copy of their owner's title insurance policy so you can qualify for a reissue rate. Most buyers don't know this. If the sellers have a recent title policy, you can often get a discounted premium, sometimes shaving hundreds or even thousands of dollars off your closing costs. Now remember, they're not going to bring it up. They're not just going to offer to go look for their title policy. You got to ask them. And if they don't have a copy, a lot of people just don't have it or they've misplaced it, your agent, which is hopefully me, can track down where they closed on the house and find it for you. Another Maryland-specific quirk: ground rent. This is rare in Montgomery and Frederick counties, but common in Baltimore City and County. It's an old system where you pay a small rent to the landowner. If a property has ground rents, you can usually redeem it for a lump sum and end it. But you need to know it's there first. Always check the title report or just simply ask your agent. Let's look at lender fees too, because people think if they have a great interest rate, they're done shopping. In Maryland, lenders can charge wildly different origination, underwriting, and processing fees. Ask for a loan estimate and compare the total cash to close. And if you're in new construction, compare the builder's preferred lender's incentives carefully. Sometimes that credit just offsets higher rates or inflated fees. Property taxes and reassessments catch a lot of buyers off guard as well. Maryland reassesses homes on a rolling 3-year schedule. If the previous owner had a homestead tax credit or the property was assessed years ago, your bill can jump sharply after closing. You can look up the current and past assessments online and get a rough idea of what's coming. But one thing that can really surprise people is when they're buying new construction. I recently worked with buyers on a brand new home where the tax record still reflected that tiny old teardown that had been there before. The online listing showed taxes that were unbelievably low, but those numbers were for the old small house. Once the county reassessed for the brand new build, the taxes were projected to nearly double. Before my clients wrote the offer, I called the county to get an estimate of the new assessed value and tax bill so we could plan for the real annual cost. It's a simple step, and it can save you from a huge shock when your first full tax bill arrives. And don't forget insurance surprises, because they're always fun. Flood coverage isn't part of standard home insurance, but Maryland has pockets of risk beyond the obvious waterfront. Even small creeks can cause floodplain issues. So check the FEMA maps and get a quote early, because flood insurance can add thousands of dollars per year. And let's talk timing on your closing, because it's an underrated way to manage your cash flow. Here in Maryland, you'll prepay interest from the day you close until the end of the month, plus a chunk of taxes and insurance. So if you close on the 3rd, you're paying almost a full month of extra interest. If you close on the 28th, you're paying just for a few days. It doesn't change your long-term costs, but it can ease the hit on closing day. That being said, there is something nice on closing of the 3rd, let's just say the 3rd of January, for example, and then your first mortgage payment is March 1st, because you always skip a month. It's more money at closing, but some more breathing room after you close. Maryland is an incredible place to buy, but it comes with details you can't afford to overlook. Understanding who really pays transfer and recordation taxes, especially with new construction. Using your legal review period on HOA or condo docs, and budgeting for inspections, insurance, and taxes can spare you huge surprises. And don't forget the title insurance conversation. Purchase the owner's policy and ask for the seller's copy to get this reissue rate discount. It's one of the simplest, least talked about ways to protect yourself and save a lot of money at the same time. When you're ready to make one of the biggest financial moves, reach out. I'll help you plan your strategy, review your numbers, and walk you through every cost and potential savings so you can arrive at closing day confident and stress-free. Thanks for watching. I do appreciate it, and I'll see you in the next video. Bye!